Hello folks, welcome back. My name is Serge with Greenlight Auto Broker. Today we're going to teach you about gap insurance, what it is, what it does, and when you need it. Now the gap in gap insurance stands for Guaranteed Asset Protection. It's an optional insurance coverage that helps you pay off your auto loan in case of a total loss or it being stolen. Now, in order to understand how gap insurance works for you, you have to understand how your insurance company handles a total loss or a stolen vehicle claim. Now, the insurance company uses Kelley Blue Book to determine your current market value, which in most cases is less than what you owe to the bank. Now, let's go over an example. I drew a little graph here. I'm going to explain to you exactly what you're looking at so it'll be easy for you to understand. This line right here would represent a balance and also what the vehicle is worth at the time when you drive it off the lot. And this line will represent the time. So over time as you're making payments and going through your loan. Now, let's use a round number here. Let's use $20,000 as an initial balance. And we're going to use $15,000 as the value because everyone knows when you drive off the lot, you do lose value in the vehicle. Now, we also know that as you're making payments in the beginning, more goes towards the interest, and then the graph speeds up at the end here. Same thing with the value. You get your initial drop in value, and over time, it continues to drop after that. Now, you notice this difference here between 20 and 15,000. It starts up here and it starts to narrow out as you go through the loan. This is your gap. This is exactly what gap insurance covers. Now remember, the insurance company will only give you what the current market value of the vehicle is. Now let's assume you're 2 years into the loan, you experience a total loss. At the time of a total loss, your balance is $18,000 and the value of the vehicle dropped to $13,000, giving you a $5,000 gap. Now the bank's gonna want their $18,000. You're holding a check for $13,000. Who is responsible for that extra $5,000 gap? You are. Now, I think at this point, it's pretty clear what gap insurance does. From the example that we just showed you, gap insurance would cover that $5,000 difference. Now, let me list some reasons for when you are going to need gap. Number one, zero down. If you're not putting any money down, you're financing tax, license, registration on top of the vehicle value. That is the situation when you need it the most. Number two is low credit score and a high interest rate. In this situation, you're paying down your balance a lot slower because a lot of the money is going towards the interest rate, creating that gap between what you owe and what the vehicle is worth. Number three, small down payment. We're talking about anywhere from 10 to 20% down. Now remember, tax, license, registration, that's about 10%. And the other 10% remaining is not going to cover the drop in value. So you definitely need gap insurance in this scenario. Number four is lease. Now most leases come standard with gap insurance. The ones that don't, make sure you ask for it. Now let's give you some examples of when you don't need gap insurance. Number one is cash deal. If you're paying cash for the car, there is no loan, no need for gap insurance. Number two is when you're putting more than 30% down, putting you into an equity position, making it more likely for the insurance to cover your loan. Now folks, this wraps up our video for today. I hope you found this information useful and now you easily understand what gap insurance is, when you need it and when you don't. If you know someone that can find this information useful, please share this post, like it, or comment if you have any questions. Otherwise, thank you and we'll see you next time.